Hello and welcome to another tutorial, and today we are going to talk about the liquidity inducement trading, where in this method we will deal with three major things: a break of structure, liquidity, inducement. These are the main factors that we'll look upon in this strategy. So first of all, let's just look into a scenario like the one which is seen on your screen right now. We see like the prices were in a proper downtrend because there's a certain break of structure that is seen here, and then the prices try to retrace back and then they move in the certain direction. Now you are looking to enter into the trade. Most of the traders will first of all think like this area, this zone around here will be a very good zone to sell. But what they do not think about is that there are some liquidity sweeps that might happen around here because there's a certain imbalance that is seen around this place here, which will make them to get stopped out earlier. So what do the institutions do? They wait first of all for the imbalance to be completed, and then the prices will shift to the other point of interest, which is above this place here, where they will place their trades and get a very good returns. So most of the traders, they always take this like a simple mistake, and they journal it like a simple mistake in their trades when they take their trades around this zone, but they are forgetting like there's a certain imbalance that has to happen here, and then there's a certain inducement which is around this area here where the stop limits, they get swept out. So it's very good to know liquidity inducement trading because it will help you to secure more profits and get away from simple mistakes like these ones. As we all know, it's best to trade following the trend, and what we see right here on the screen is a very proper downtrend. Why? Because we have seen a certain break of structure, as I said right here. So right now what we have to see is that the price has to retrace back into a certain zone, get induced in this area, around this area here, and then the prices will move back to the point of interest, which will be around areas which are above this area right here. And then after that, we have to see the prices coming back to the original point where they were before. So basically what will be seen around this area here is the prices first of all will try to retrace back to the original supply zone before they start selling again. Okay, so we can see right now the prices are still playing properly. And what we see right now, like most of the traders might think maybe like this place here is a very good place for us to enter into the trade, but they're forgetting that this right here is not a very good entry point, because we have already seen like there's a certain inducement which is happening right here, and this inducement will cause the prices to be shifted higher. We still need the prices to come up a bit higher into a certain area that is very favorable for us to trade. And for me, looking at this area here, I can mark out my zones, which I see like around this area here is a very good zone for me, which will be my point of interest to enter into this trade. Having seen that the traders will want to enter into this trade in around the area which is above the inducement, but they are forgetting the main point of interest, which will be formed like the one which I told you above. So most traders will enter into this region here because like they see there's a certain place here, but this is a liquidity area, and what we are interested in is the imbalance which is formed around this area here, which will make us to have a fair value gap, and this fair value gap needs to be filled up before we enter into the trade. So up to this point, what we have seen is that there was a break of structure which showed us the market has shifted to bearish, and then after that the prices started to retrace to fill up the imbalance where the institutions and retail traders like to sell. But for us, what we look at the inducement which is seen, and the early sellers are being swiped out. After that, what will be seen right now is the liquidity around this area here, where it's a likely place where most of the traders will get swept out, all right, in this area here. So for us, we have to wait until we see our original, which is the main selling point, which is above the imbalance which is seen around here. exactly at this point here. So after me seeing this area here, I'll just have to put my sell position around this area here. All right, my stop losses will just be above the POI, and then my target will be down here, giving me a very good 6.31R. And let us see how the prices play out. And then boom, just like that, you see the trade is completed using the liquidity inducement trading. Three main things to consider: breakout structure, retracement into the fair value gap left behind, and then we have to see a liquidity sweep before entering into the trade inside our point of interest. If you like these videos, please don't forget to leave a subscribe button, leave a like and comment. Let me know what you want me to talk about in the next videos. Thank you.